Welcome back everyone. After my recent video about why I believe TENAGA National Berhad, or in short TNB, is a solid stock to hold into next year 2025, one of you reached out and asked, what about YTLPOWR? Is it a good stock too? Well, challenge accepted. In today's episode, we'll deep dive into YTLPOWR International Berhad, its business model, financial performance, and even compare it to TNB. I will also compute YTLPOWR's intrinsic value using the discounted cash flow or DCF model to see if it is worth adding to your portfolio. And yes, I will let you know too if I'm buying it myself. Quick tip, make sure you hit that like button below and stick around till the end because we are covering everything from YTLPOWR's business mode to its growth prospect and more. Let's get started. Now, a brief background of YTLPOWR. YTLPOWR, trading on Bursa, bearing stock ticker 6742, is part of the YTL Corporation, a big Malaysian company run by the Yeo's family. The group is led by Tan Sri Francis Yeo, and YTLPOWR focuses on things like electricity, water, and telecommunication. The Yeo's family owns a large part of YTL Corporation and its businesses, including YTLPOWR. So, what does YTLPOWR International actually do? Think of YTLPOWR as the Swiss Army knife of essential services. It's versatile, reliable, and pretty much everywhere. Here's a breakdown of how they are keeping the world running, and yes, your Netflix streaming. First, power generation. YTLPOWR operates power plants in Malaysia, Singapore, Indonesia, and beyond, delivering electricity to homes and businesses. So the next time you are binge watching your favorite series, there's a chance YTLPOWR is behind the scenes, keeping the lights on. And they are not just sticking to the old school stuff, they are investing into solar and green energy projects too. That means cleaner energy, happier earth, and maybe even lower bills for us in the future. Second, water and sewerage. In the UK, they own Wessex Water, where they are in charge of making sure everyone has clean water and proper sewage systems. It's like being the nation's plumber on a really big scale. Third, telecommunication. Yes, they have got internet. In Malaysia, YTLPOWR is the force behind Yes, one of the country's most advanced 5G providers. Whether you are doom-scrolling TikTok or smashing opponents in online games, their high-speed internet has got your back. Fourth, data center. Data is the new gold, and YTLPOWR is digging in with style. They are not just building data centers, they are creating energy-efficient, reliable, and scalable ones powered by 100% renewable energy. Talk about setting a green standard for Southeast Asia. But here is where it gets even cooler. In March 2024, YTLPOWR unveiled YTL AI Cloud, which is a game changer in the world of AI computing. They are bringing in NVIDIA's cutting-edge GB200 NVL72 system, making them one of the first to adopt this technology. Imagine an AI supercomputer so powerful it can turbocharge the development of generative AI. And the best part, it is set to go live by mid-2024. These AI services run on YTL's high-tech data centers, which provide the brains or infrastructures and the brawn, which is the energy and cooling needed for high-performance computing. This partnership isn't just about tech, it's a giant leap for Malaysia's AI and supercomputing game, driving innovation and economic growth across the region. Fifth, digital banking. Yeah, banking just went digital. YTLPOWR is part of a consortium awarded a digital banking license by Bank Negara Malaysia. Their goal, to help undeserved and unbanked populations get access to financial services, all while supporting Malaysia's push for financial inclusion. 6. Property development. YTLPOWR is also in the real estate game, through their award-winning subsidiary, that is YTL Development. They are not just building properties, they are crafting the entire communities. So, from Malaysia to Singapore, Indonesia and the UK, YTLPOWR is a global player. They have built a diverse portfolio, earning revenue from multiple markets while ensuring that services stay essential everywhere. In simple terms, they ensure you have power for your devices, clean water for your coffee, internet for your YouTube videos like this one, sustainable energy for a green future. Pretty cool, right? Next, how is YTLPOWR performing financially? Now let's talk about money, honey. Revenue growth. YTLPOWR's revenue has been fire over the past 3 years from financial year 2021 to financial year 2023. Look at this beautiful growth chart. YTLPOWR's revenue was from RM 10.8 billion in financial year 2021 to a whopping RM 21.9 billion in financial year 2023. This growth comes from strong power generations and water and sewerage businesses. That's like your salary doubling in 2 years. We wish, right? But here is where it gets juicier. Take a look at how YTLPOWR PBT or profit before tax has been growing year after year even faster from financial year 2021 to financial year 2023. Now here is where it gets exciting. For financial year 2024, their net income jumped a whopping 71% to RM 3.46 billion. It's like leveling up in a video game. Rapid progress. How does YTLPOWR stack up against TNB? Now let's compare these two powerhouses by looking at their free cash flow yield, or in short FCF. TNB has a free cash flow yield of 16.6% per annum. Based on this, it appears to me that TNB is a cash cow, making it ideal for income-focused investors. The stable free cash flow yield of 16.6% per annum provides strong current returns, though with slower growth potential. What about YTLPOWR? YTLPOWR has a free cash flow yield of just 1.39% per annum, thanks to its heavy reinvestment into the future growth like 5G and renewable energy. While current yield is at 1.39% per annum, the company's aggressive reinvestment could lead to substantially higher future cash flow. So what are the key insights I could gain from their free cash flow yield? From their free cash flow yields, we can see that TNB generates about 12 times more free cash flow per invested ringgit. The difference is substantial. That is RM 1,521 more annual free cash flow with TNB for the same amount of investment. However, YTLPOWR's lower free cash flow reflects its growth strategy, which is not necessarily a weaker performance. But like many, if you may be asking, how does high free cash flow yield benefit its shareholder or potential investor deciding if it's a good buy based on this metric? Here you go. Let me help to answer this for you. Free cash flow yield is a powerful metric for shareholders because it reflects a company's ability to pay dividends, buy back shares, reduce on its existing debts, or even reinvest for future growth. And the most important thing is to be able to stay resilient during tough times. When a company consistently generates high free cash flows and put it to good use, shareholders can directly benefit through income, increase share value, and reduce investment risks. Next, let's talk about its dividend yield comparison. Let's take a look at both stocks' dividend yield. Here is a bar chart comparing the dividend yields of TNB and YTLPOWR. TNB offers a higher dividend yield of 3.86% per annum compared to YTLPOWR's of 1.69% per annum. This means if today you were to invest RM 10,000 into each stock, this is what you would get as an investor based on their dividend yields. With TNB, with a dividend yield of 3.86% per annum, you would earn approximately RM 386 ringgit per year in dividend income, which is higher than the average fixed deposit interest rate of about 3% per annum. On the other hand, YTLPOWR, with a dividend yield of 1.69% per annum, you would earn approximately RM 169 ringgit per year in dividend income. This chart highlights the difference in annual dividend returns, making TNB more attractive for income-focused investors. Of course, on top of its dividend income, there is also the potential capital gain from the appreciation of the underlying stock price to eventually move up to reflect its fair value, or some call it intrinsic value. So this brings us to the next questions. What is the intrinsic value for both YTLPOWR and TNB? First, let us compute YTLPOWR's intrinsic value using the discounted cash flow, or in short DCF model, based on YTL's power free cash flow to equity, which is the gold standard for stock valuation. Here I am making assumptions of a 5-year growth at a mere 4%, which is a very conservative numbers, and I'm using a discount rate or cost of opportunity of 6.88% per annum, and assuming there is zero growth beyond the first 5 years. Based on this conservative assumption, YTLPOWR's intrinsic value is at 4 ringgit and 98 cents, making it about 70% undervalued compared to its current price of 4 ringgit 14 cents as I'm recording this video on 22nd December this year. The reason why I use 4% as its future projected growth rate, as this is the forecast given by Wall Street. So do note that this is a super conservative computation. Based on the Alpha Spread website, YTLPOWR has a historical growth of around 22% per annum. If based on the projected future growth of 22% for the next 5 years, assuming zero growth beyond the 5 years, YTLPOWR's intrinsic value would be around 14 ringgit and 31 cents. To be conservative, let's say we halve it and assume that YTLPOWR could only achieve a growth rate of around 11% for its future next 5 years. The intrinsic value based on this assumption would now be at around 7 ringgit, which is still a steal based on its last trading price of 4 ringgit and 14 cents. On the other hand, TNB intrinsic value is at 23 ringgit 58 cents, or 41% undervalued from its current price of 13 ringgit 94 cents as I'm recording this video on 22nd December 2024. Just so you know, while computing intrinsic value of a stock using DCF model may be a powerful tool, it should be approached with caution and not taken as an absolute truth. For myself, I use it as a guideline rather than an absolute guarantee. Do know that intrinsic value is also not set in stone. The numbers evolve with changes in the company's earnings, growth prospect, risk profile, and external factors like interest rate or macroeconomic condition. Now let us take a look at its business mode. YTLPOWR has a medium to high business mode because it is strong in regulated utilities and has long-term contracts. However, it faces challenges in competitive areas like telecommunications and changes in government rules. It is growth-oriented, focusing on renewable energy, 5Gs, and global markets. It is perfect for a risk taker with a long-term view. Whereas TNB has a high business mode because of its near monopoly in electricity transmission and distribution in the whole of Peninsular Malaysia, its critical role in Malaysia's energy sectors, and government support. It is stability-oriented, hence ideal for conservative investors who value steady dividends. Chart analysis on YTLPOWR International Berhad. Now let's move to my favorite part, that is chart analysis of a stock. In July 2024, YTLPOWR's international share price dropped significantly. This happened after it was announced that mobile network operator, or in short MNOs in Malaysia, would only be allowed to own a stake in either the first or the second 5G network, but not both. The government agency in charge, the MCMC, started looking for a company to build the second 5G network. YTLPOWR subsidiary, that is YTL Communications, was already part of the first 5G network through a deal with Digital Nasional Berhad, or in short DNB. This new rule raised worries that YTL might miss out on the future opportunities with the second 5G network, which made investors concerned and caused the share price to drop from from a high of 5 ringgit 32 cents to a low of 3 ringgit 66 cents on the 30th August this year, before making a rebound to a high of 4 ringgit on 2nd September Monday. Later in early September 2024, YTL Communications faced an investigation over a past project called One Bestari Debt, which is a RM 4.07 billion program to bring high-speed internet to schools. The investigation looked into claims of incorrect payments totaling RM 2.7 billion. This news added more pressure on YTLPOWR share price. We then saw how on the 3rd of September, Tuesday onwards, the stock price made another decline for the next 7 consecutive trading days to make a new low of 3 ringgit 30 cents, which also formed a double bottom on the 11th September 2024. This double bottom pattern staged an anticipated rebound back to 3 ringgit 98 cents, which was a 20% rebound, before declining further to an all-time low of 2 ringgit 83 cents on the 22nd November this year. Since then, YTLPOWR stock has been staging a rebound to make a higher high. The chart made 2 bull flags to make a higher high. On December 18 recently, it was announced that the investigation found no wrongdoing by YTL Communication. The next trading day, that is on the 19th December, Thursday, we saw how YTLPOWR stock price made a gap out on the open from the previous day close of 3 ringgit 66 cents to an open price of 3 ringgit 86 cents before making higher high. On 20th December, Friday, YTLPOWR stock closed back at around 4 ringgit 14 cents after making a daily high of 4 ringgit 30 cents. See how at 4 ringgit 14 cents, it is sitting at a nice support level of its daily 200-day simple moving averages, or in short SMA, which usually serve as a strong support level. We could also see why there was such a pullback on the 20th December, as the stock price was showing signs of overextension, indicated by the corresponding RSI indicator below, that is, a reading of above 70. Fundamentally, YTLPOWR is currently still trading below its super conservative intrinsic value of 4 ringgit 98 cents and sitting at strong support level 2. To me, to enter at strong support level is good. If I were to buy into YTLPOWR, I may choose to buy my first tranche at around the current level, and should it retrace down to hit its next strong support, that is around 3 ringgit 75 cents, I may buy in my second tranche. My final take: if you're the type who enjoys a steady ride with good dividends return, TNB might be your pick. But if you are up for some calculated risk for growth in telecommunications and international renewable energy market, YTLPOWR could be your ticket to growth. Either way, both stocks are undervalued right now, making this an exciting time to invest. Pro tips: always pair valuation models like DCF with an understanding of the company's moat and market conditions. Numbers are great, but context is king. That's all for today, Investment Warrior. If this video helped you understand YTLPOWR better, do smash onto that like button harder than how YTLPOWR smashed their revenue targets. Drop a comment below and share your thoughts. Let me know which stocks you are leaning toward, YTLPOWR or TNB. Don't forget to subscribe and hit that notification bell. We have got more Malaysian stock analysis coming your way. Until next time, happy investing!